Thank you. It's really great to be here. And to kick off the session, we've done an investment survey and good job in terms of what we found last year in the second half. What did the survey tell us?
All right, so we'll just give you a quick fire of the result of our investor sentiment survey that we have done last year. So as you can see here, there were around 120 respondents, most responders coming from the key markets, China, Hong Kong, Singapore, including Thailand as well. So most of the responders, 38% are corporate clients, and also the other 38% is from the PE funds. So what did they say? Without spending too much time, I'll just give you some highlights of the key findings. So investors still very interested in buying hotels, and Thailand, as you can see on the yellow box there, is still up there as the most interested destinations for investment. And the other key ones, I think we are hearing this in the market quite a lot, is the rising cost of debt and also the increasing development costs that we have as a result from the global uncertainties in the market. One of the interesting results that we have seen, and I believe is quite interesting, is the top right corner, where 65% of the investors says traditional hotels is still what they're looking for. We believe that this is actually from the fact that traditional hotels have a regular setup, and it's easier to buy it and repurpose it in the future. So these are some of the key findings from the surveys. You can read more about it on our website. And just a heads up, we're in around 3 weeks from now, we will launch another report. It's called Global Hotel Investor Outlook for this year. So that will likely come out during the early of Feb. So keep an eye on that. And maybe Kun Paul, can you give us what happened last year in terms of transactions?
Thank you, Kap Kun Job. According to our data, we recorded 12 transactions totaling 10.4 billion baht. And of all those transactions, it was interesting to see it was all domestic sellers, and about 20% of the buyers in terms of volume were foreign capital. Comparing that to 2021, 60% of the overall volume was foreign capital. And starting from the top left-hand corner, you have the Coast portfolio, 2 leasehold hotels, one in Samui, one in Phangan. These were sold to a Hong Kong group. The Vikasa Yoga Wellness Retreat in Samui was also sold to a private equity fund out of Hong Kong called Alta Capital. The 3 down in the bottom, the IBIS portfolio, one in Phuket, one in Krabi, and one in Hua Hin, was sold by Erawan to Origin, a listed residential developer. In terms of the transactions on this slide, Oakwood Studio was developed by Boutique Corporation, and it was sold to Worldwide Hotels out of Singapore. This was sold as a brand new vacant possession was possible, and it also had a BOI promotion which allowed Worldwide Hotels to own the hotel 100% as a foreign party. Grand Mercure Windsor was purchased by AWC. It was the largest transaction in Thailand and also the largest transaction in Bangkok, worth over 3 billion baht. And AWC has planned to spend a significant amount of capex to reposition this property. In addition to this property, AWC also purchased Westin Siray Bay for approximately 2.5 billion baht, and they have planned to reposition and spend some capex on the property as well. The other transaction that AWC bought in 2021 that closed in 2022 was D2 Dusit Chiang Mai. And another notable transaction in Chiang Mai was the Anantara Chiang Mai that was sold from U City to J-Mart. So in terms of volume in Thailand, before we talk about Thailand, just to look at the wider context, last year global hotel volume came down slightly at around 3%, and it ended at $69 billion US dollars. US went up approximately at around 4%. EMEA came down significantly with a drop of 30% year over year, and APAC went up 20% to about 11.4 billion US dollars. So that's about 20% below the peak in 2019. In terms of Thailand, there were several transactions that exchanged contracts last year that didn't close, and these are about 4 billion baht that will be closing in the first 1 to 2 quarters of this year. As a result, the transaction dropped from 2021, which was a pretty healthy level, by 15% down to 10.4 billion baht. And this year, we're expecting 15% increase from this year up to 12 billion baht. And just to, as a comparison, the 10-year average up until 2019 was around 12 billion baht. So pretty healthy levels, and it will be a pretty healthy year again this year in terms of what we anticipate. The other 2 hot topics that we've been hearing a lot is financing and inflation. And Kunjop, in terms of our observations and what we feel are the key takeaways, would you be able to share, please?
Sure. I think the key takeaway is largely summarized in this slide here, that we want to highlight why Thailand, as many panelists have been mentioning, why we're still quite attractive for investors. So if you look here, comparing the spread of the yield with the all-in interest rate across the key markets, Bangkok, Tokyo, Kyoto, Singapore, Sydney, Hong Kong, and Seoul. Our hotel yield is still, the spread between the yield of hotel and the interest rate is still positive. We are not as aggressive as in Tokyo or Kyoto. They are very strong markets right now, but we are still up there. And looking from this slide here, even though our interest rate is at roughly 4.5, our yield is one of the highest in the market. So that still makes us quite attractive, together with the strong tourism fundamentals that we have. A lot of people mentioned that. Chinese coming back in, our key destination is still very strong. So we still have a good pipeline, a good outlook for the Thailand market going to 2023 and ahead. This is a lot of information, so I probably won't go into all the details. But in general, I just want to summarize the key figures here. We only have 3 minutes left. So we have experienced an inflation rate of 6% in the past. Our GDP growth was around 3.6%, but keep in mind that was coming from quite a big dip during the lockdown period, given that we are very tourism-centric economy. So anything that happens in tourism affects us directly. Other than that, what we have seen in the market is that banks are becoming a bit more restrictive, becoming a bit difficult. We have seen, a loan-to-value ratio that has dropped slightly in the past few months. Yet, what we're looking at is the market is still quite active in terms of high net worth and corporate buyers. There's still a lot of buyers coming from that segment, while private equity fund, property developers, they're taking a big hit from all the situation that's happening today, economy, inflation, and everything, rising costs. So that has been the more affected segment, the more affected parties for Thailand. So lastly, we have 2 minutes left. We just want to summarize what happened last year and what would be the outlook for this year. People,ครับ.
And still, you often hear Bangkok, Phuket, Samui as the 3 top investment destinations. They are, in terms of what we saw in 2021 and 2022, they accounted for 80% in 2021. And last year, they were over 70% of the overall volume. Bangkok remains a highly strategic location for a lot of investors. There's a lot of capital chasing for hotels in Bangkok, and throughout the pandemic, we've seen little to no change in terms of value impact from the pandemic. But what we're seeing is more opportunities, relatively speaking, for hotels to be available for investors to look at. And in terms of 2023 outlook, Kunjop, any interesting trends that you
I think the key trend here that everybody is talking about is the return of Chinese tourists. We were very reliant on them in the past, pre-COVID, and we likely will continue to be so. So their return or the speed of the return will have a huge impact to us. But what we believe is that probably we'll see a more concrete change in the arrivals, in the spending, maybe at the beginning of Q2, when tour groups actually are more prepared to bring Chinese into Thailand, because after that sudden announcement by the Chinese government, they don't have time to prepare yet. So we have not seen quite a sudden impact both in Bangkok and in other markets like Phuket yet in terms of Chinese arrivals, but maybe in the next 2 or 3 months we'll see a more solid increase on that. And obviously rising interest rate and inflation will play a big role in hotel operations and development. Thailand has been quite lucky in terms of our economy has not and hopefully not entered recession. In terms of economy, we're recovering, not as fast as we wanted to be, but we're getting there. So I think we're in the path of recovery, people.
Yep. And in terms of what we've been seeing is more and more pressure. The banks are becoming more conservative. There are conversations here and there with hotel owners, and we expect to see more opportunities coming to the market, as well as this. On the supply side, there will be more opportunities, and on the trading performance in terms of how active the investors have been, we feel that this year will be the best, the most healthy transactional environment for hotel transaction. Thank you. There's a lot of data, so feel free to find me, Kun Job, or the JLL team, who are here if you have any questions. Thank you.
Thank you.